All right. What is up, tycoons? What's up, traders? Super excited for today's video. We are going to take a look at the top US LNG companies that you guys can possibly invest in the stock market. Okay. Now, the reason we're looking at LNG is because LNG has become very popular really ever since the whole Russia-Ukraine crisis and the European energy crisis, and LNG is becoming a bigger factor in the US. So we're going to review some of these companies. All right, we're going to take a look at the charts and give you a brief summary of what they are. And then I also have one stock as well at the end, kind of a sneak peek stock that I want you guys to take a look at and do some more research on as well. Now, as always, none of this video is financial advice. All right, I am not a registered financial advisor or a broker. So make sure to read through the disclaimer. Again, this is just free, publicly available information that I'm presenting to you guys, and hopefully you enjoy the video. So make sure to smash that like button, subscribe to the channel if you guys are new. And to start off, one of the main reasons that natural gas has my attention is because nat gas is at that $2 price range, right? And typically below $2, all right, we've seen it stay there from anywhere from a matter of about a quarter, okay, so about 90 days, all the way up to about 305 days. So, nat gas stays at the $2 or sub $2 range. It's done that many times before in the past. All right, and it's typically stayed anywhere from 90 days to about close to around a full year. All right, it stays in that price range, and then it's recovered very nicely historically, right? So if history wants to repeat itself again, there is the chance that this could be a good opportunity. All right, so that's why I'm covering it. That's why it has my attention right now. And of course, do your own research before making any investments. Now, this is the 2022 performance of the stocks that we're going to go over, right? We also have BOIL and UNG on here. And the reason that I'm making this video is because there are a lot of risks involved with UNG and BOIL. When things are going up and when the price of nat gas is going up, BOIL and UNG will absolutely rip. But if things are going bad and the price of nat gas is going down, it's going to look very terrible in BOIL and UNG. Here we have BOIL and UNG. All right, this is UNG was down about 36% in 2022, and BOIL was down about 81% in 2022. Now, the companies that we're going to cover is going to be BP, okay, Chevron. We also have Shell, TTE, which is Total Energy, and then Cheniere Energy, which ticker symbol LNG. So we can see that in 2022, CVX outperformed all of them. It was up about 55%. Shell was up 50%. TTE was up 47%. LNG, which is Cheniere, was up 46%. And BP was up about 37%. Meanwhile, UNG and BOIL were both down massive amounts. Now, this is pretty relevant and pretty, interesting when you compare it to the stock market. Everybody knows that the tech sector and the S&P had a very brutal bear market last year in 2022. Meanwhile, these companies were actually able to give out some really amazing gains and, returns. Now, this is their 2023 performance, what they look like, since the new year has started. BP is leading the way, up about 8.75%. LNG is up 4.61%. Shell down about 0.04%. TTE down 7%. And CVX down 9.52%, with UNG and BOIL both down massive. Again, UNG down about 52% and BOIL down about 81%. Now, someone actually requested me to go over some of the stock splits for UNG and BOIL. So I want to go ahead and do that for you guys right here. So this is UNG's stock split history right here. They had one in March 9th of 2011. They had one in February 22nd of 2012. And they had one in January 5th of 2018. The first one was a 1-to-2 ratio. The other two were 1-to-4. Now, this is also a really interesting chart right here as well. UNG and BOIL are typically, in my opinion, trading instruments, right? For either bullish or bearish positions on natural gas, and not really investments, right? And not necessarily long-term investments. Let me put it that way, right? If you take a look, the growth of $10,000 in UNG, which is not the leveraged version, Boyle is the leveraged version, right? That $10,000 would have turned into $799 in the past 10 years. So you pretty much lost all of your money if you invested in Boyle 10 years ago or UNG and simply held it. Now, these stock splits, and the reason that there are these stock splits, and in particular, these are reverse stock splits. Right. And so when a company conducts a reverse share split, it's usually because shares have fallen to a lower per share price point than the company would like. This can be important, for example, because certain types of mutual funds might have a limit governing which stocks they may buy based upon per share price. The $5 and $10 price points tend to be important in this regard. So, for instance, mutual funds that may cut UNG or may cut Boyle out of their fund simply for the fact that it's trading below $5 a share or below $10 a share. And you have to keep in mind, institutions, hedge funds, and mutual funds, that's where a lot of the big money is, right? And that's why they call it big money. And so when those positions and many of those, funds or institutions cut out these stocks, it can really decimate some of the price action and some of the liquidity as well in things like UNG and Boyle. Now, the next one here we have is Boyle. Okay, now Boyle has had more stock splits. They had a 1-to-5 split in May of 2012. Then in May of 2015, they did a 1-for-4. In March of 2018, they did a 1-for-5. And in April of 2020, they did a 1-for-10 split. Now, this is the growth of $10,000 without dividends reinvested in Boyle over the past 10 years. That $10,000 would be worth $367. So, that's kind of the whole purpose of this video, is just to show you guys not only can you, buy and sell UNG and Boyle, okay, there are actual companies themselves, right, and companies that report earnings, and you can see if they're, improving on their earnings, if they are, going down on their earnings, and really take a look at some of the fundamentals, right? So we're going to cover some stocks in this video. I went over them. The first one we're going to look at is Cheniere. Now, in 2016, Cheniere became the first company to report LNG to the 48 states, to export LNG from the lower 48 states. It has since become the leading U.S. LNG exporter and one of the largest global producers. The company operates 2 LNG facilities along the U.S. Gulf Coast that export gas to foreign buyers. Now, LNG, the ticker symbol LNG, actually benefited a lot from the fire in Freeport when Freeport was shut down. That's one of their biggest competitors, essentially. And so it was able to, kind of help them out and give them a little bit of boost, in my opinion. Now, Cheniere Energy's LNG operations, they buy natural gas on the open market and have it shipped to its facilities via third-party pipelines, as well as those it operates. It then liquefies the gas and sells roughly 90% to foreign buyers, such as utilities under long-term fixed fee contracts. It makes the remaining supplies available to other buyers at the going market rate. Now, the company's contracted volumes provide it with predictable cash flow. It uses that money to repay debt, invest in expanding operations like the Corpus Christi Phase 3, and reward shareholders through dividends, which it initiated in 2021, and share repurchases. Cheniere announced its 2020 long-term vision in 2022. It expects to produce more than $20 billion of available cash through 2026 and increase its distributable cash flow run rate to more than $20 per share. The company forecast supports further debt reduction, share repurchases, and plans to boost the dividend by 10% annually, all while investing in expanding its LNG capacity. The company is also working to deliver even cleaner LNG. Cheniere has a collaboration agreement with Shell to supply it with carbon-neutral LNG cargoes by purchasing offset credits from Shell's global portfolio of nature-based products. The initiative should enable Cheniere to play a role in the energy transition to cleaner fuel sources. Now, Shell is actually on this list here as well, I believe. The second one we're going to take a look at is going to be Chevron. Chevron actually has a large and growing LNG portfolio. The company owns a 47.3% interest in Australia's Gorgon LNG, which has the capacity to produce 15.6 million metric tons of LNG each year. The company also has small interests in the smaller Wheatstone LNG facility in Australia and then the Angola LNG project. The U.S. and oil gas giant is evaluating opportunities to expand its LNG business. Chevron is considering ways to supply gas to Europe. It signed contracts to buy LNG from U.S. plants operated by Cheniere and Venture Global with an eye toward exporting the gas to Europe. The company is also looking at other potential U.S. gas export opportunities. Chevron is also considering using gas produced from the Eastern Mediterranean. The company acquired Noble Energy in 2020, giving it a large gas resource off the coast of Israel. It's evaluating a potential floating LNG facility to ship some of the gas to Europe. The third one we're going to take a look here is Exxon Mobil. Exxon Mobil is a global leader in LNG. The oil and gas giant owns interests in several LNG projects across the world that produce 23 million tons per year. Notable investments include ownership interest in Gorgon LNG, PNG in Papua New Guinea, and several LNG trains in Qatar. LNG is one of ExxonMobil's 4 areas of strategic investment focus through 2027. The company is investing in several projects aiming to grow its global capacity to 27 MTPA. One notable investment is the $10 billion Golden Pass LNG project in the U.S. The joint venture with Qatar Energy will have the capacity to export about 18 million tons of LNG per year starting in 2024. ExxonMobil is also working with Qatar Energy, Shell, Total Energies, and others to expand the North Field in Qatar. The 2-phase expansion will feature 6 LNG trains that will grow the capacity from 77 to 126 by 2027. The first phase will cost an estimated $30 billion. Now, real quick, guys, we have to give a shout out to a sponsor for today, which is going to be Upside. Did you guys know that an average American spends between $150 to $200 on gas every month? It, of course, varies and depends on the state, lifestyle, and driving habits. American families spend approximately $500 on gas annually, which is almost 2.24% of their monthly income. Now, what you guys can do is you can download the app, all right, and you can get cash back on your everyday purchases without changing anything about how you shop or live. You'll pay however you normally do and cash back will be deposited directly to your Get Upside account. There's no limit on how much you can earn. So the more you spend, the more you can earn. You can earn cash back at over 50,000 locations. If you use my code RCQ599, you can get an additional bonus on your cashback rewards. So remember, RCQ599 is going to be the code. If you use that on the app, you can get an extra 15 cents per gallon on your cashback rewards. All right. So this is savings, guys, and they're calling. Okay. Pick up the phone, start saving now, download the app. All right. Remember, you guys can earn cash back at over 50,000 locations. Use the code RCQ599 to get an additional 15 cents per gallon. I've been using this app now for over a month. I've already made about 20, 30 bucks, okay, just in the past month alone. Now, a lot of people like Boyle, a lot of people like UNG. Think of it as free shares, right? You can literally take that money, all right, out of there, and you can go ahead and purchase free shares of any stocks that you guys think are really good investments. So remember, download the app, okay? You can choose your payment. You can choose to get it to your bank account. You can also choose a variety of gift cards, right? You can use a PayPal card, a Walmart, Applebee's, okay? You can even get an Amazon or AMC card. For all of you AMC apes out there, you guys can use the cash back, all right? Get yourself an AMC gift card. Go watch a movie at the AMC theater and start day trading AMC while you're doing it, okay? Like a real ape would. All right, use code RCQ599. Download Upside, use that code for an additional 15 cents off per gallon. Our fourth stock that we're looking at right now is going to be Shell. Now, Shell was an early pioneer in the LNG market and has grown into a dominant force over the years. The company has LNG supply projects in 10 nations. It also has interest in a couple of regasification plants that can turn LNG back into gas so it can flow through local pipeline systems. Shell operates as an integrated gas business. It controls supply by producing gas from a variety of fields. The company also operates LNG export facilities and markets LNG from its own facilities and those operated by third parties to customers around the world. The combination enables Shell to keep costs low so it can maximize the value of the LNG it produces. The company has several integrated gas projects under construction to maintain and increase its LNG output. In addition to projects in Qatar, it's leading the development of LNG Canada. The two-chain project will have the capacity to produce 14 million tons of LNG easy year, basically every year when it becomes operational in 2025. Meanwhile, it has many more in development, as well as potential expansions of existing facilities to fuel growth in the years to come. Shell will remain one of the driving forces in the LNG market. Now, our fifth one on the list is going to be Total Energies. Total Energies has made LNG a priority in recent years. The French energy giant rebranded in 2021 to reflect its strategy shift toward cleaner energy. That includes a focus on investing in renewable energy, electricity, and natural gas. It aims to have gas, natural gas, hydrogen, and biogas supply 50% of its energy mix by 2030. The company has acquired and developed several LNG projects in recent years. The investments pushed it up the global rankings for production capacity. Combined with its third-party supply agreements, it was the #2 global LNG player in early 2023. Like Shell, Total Energies LNG operations are both integrated and global. It operates several production facilities around the world that supply gas to liquefaction complexes. It also runs a large-scale marketing and distribution arm that sells and delivers gas to customers. The integration helps it to get the most value from the LNG it produces. Total Energies expects to continue expanding its LNG empire in the coming years. It set a sales target of 50 million tons of LNG by 2025, which should help it to maintain its position as the second largest global player. It has several projects underway to achieve that goal, including the Arctic LNG 2 in Russia, the Mozambique LNG, and the NLNG Train 7 in Nigeria. The growth could enrich its investors if LNG demand expands as expected. Now, the stock that I wanted to include here today is Trillion Energy, all right? Now, Trillion Energy is not available on normal markets. It's what's known as an OTC stock, over the counter. So, you'll have to contact your broker about purchasing that. Not every single broker is going to allow you to do that. But this is a stock that you guys can look into and research. And the reason I'm bringing it up is it's been making a lot of news lately, and it's been in the headlines a lot. Now, they were highly exposed to the European energy crisis with record high nat gas prices, right? And this really helped them out a lot. They have a natural pipeline grid in Turkey, right? And that's where they're doing a lot of their stuff. There's really strong demand for natural gas. If you take a look at this chart here, we have the spot LNG, we have Nigeria LNG, Algeria LNG, Azerbaijan, Iran, and Russia. And you can see the percentages of these, all right, like billion cubic feet, all right. They are the 7th largest nat gas consumer in the world when it comes to Turkey, and around 60% of their imports are from Russia/Iran. So this is like an overview of Turkey right here. And as I said, they're making a lot of headlines. Goldman's strategy to play the $3 trillion energy revolution. That was a headline that they put out on CNBC, and they kind of dived into Trillion Energy a little bit more. Now, their Trillion Energy's reserve report recently highlighted a 426% increase in proven natural gas and oil reserves, and they're focused on developing clean natural gas power in the Black Sea region. Right. Now, the CEO, Arthur, he joined Steve Darling from Proactive to share details of a third-party report summarizing its 2022 year-end reserves. Halloran tells Proactive the net present value of proved reserves increased by over 200% to 123.8 million, and the NPV of proved and probable P2 natural gas reserves increased over 400% to 432 million. He also shared with Proactive Flow test results for the West Akaka and Guluk natural gas wells at the SASB gas field offshore of Turkey. So dive into these companies some more, all right? Definitely do some research on them. See if these are something that you guys would maybe want to invest in, right? Do you think there's opportunity? Do you guys think there's a risk? Of course, consult with a financial advisor before making any decisions. But I just wanted to expose you guys to something else besides UNG and Boyle. As you know, we saw how the return of $10,000 invested in those, if you bought and held for 10 years, you would have less than $1,000. So you pretty much would have lost all your money, over 90% in that 10-year time period. And, you know, these are just some of the different companies that you could think about investing in if you like natural gas. And if you think that natural gas may have a bullish cycle sometime in the future. So appreciate you guys watching. Smash that like button, subscribe to the channel if you guys are new, and I'm out.